Hey, what's going on, guys? It's Ricky with Technical Solutions. Hope that you guys are all having an amazing Sunday. Today is June 29th, 8:56 p.m. And I wanted to go live very quickly just to talk about how the markets are trading during the overnight hours and what to pay attention to this week. So, real quick, where are the markets as right now based off of where we closed on Friday? So as many of you guys know, NASDAQ market closed slightly in the green. Of course, a really strong recovery into the close. Markets were in the red, but of course, as always, they have to pretty much run up into the close, so they barely close in the green. Now, again, markets have gapped up since then, and I would expect that partially due to this gap up is some of the news that we actually are just receiving right now. It says Canada is removing its digital service tax on tech companies to restart trade talks with the US. This comes just the day after President Trump canceled trade talks with Canada due to this tax. So for those that did not hear the news, originally, supposedly Canada was being too difficult to work with, that they've been, that they not only have been taxing or have had higher tariffs when it comes down to what they have on the U.S., but then also they had this, what's it called? This pretty much digital service tax. And that was something that I guess Trump just was not okay with. He pretty much said, I'm going to cancel all trade talk conversations until they remove this. So 24 hours later, they ended up implementing the idea of removing this digital service tax on tech companies to restart trade talks with the U.S. And again, markets look to be responding in a pretty positive light. Let me look at this on the 30-minute time frame. Yeah, new all-time highs for QQQ, and there we go. Keeps on pushing, higher highs, higher lows. One thing that also was said, I don't think I have it here. You have Trump that is just criticizing Jerome Powell and stating that our interest rates right now should be 1% or less, but the only reason that they're not is because of Jerome Powell. I think that Trump just has a really difficult time understanding or respecting that Jerome Powell has a set list of powers that Trump doesn't. Trump cannot influence the Federal Reserve, and all he has done in the past before is that he criticizes Jerome Powell and the Federal Reserve because of his refusal to cut rates, and it seems to be just more of a pressing issue. I feel like he's been more vocal about it more now than he has in the past, and that's because the U.S. needs to refinance its debt. I think it has, and you guys can correct me if I'm wrong, but about $9 trillion that needs to be refinanced by the end of the year, and interest rates are incredibly high right now for them. So obviously he wants interest rates to be lower, and the really interesting part about this is that if inflation begins to come in because of these tariffs, that's the thing that Jerome Powell has stated in previous speeches before. At that point, the expectation of rate cuts will then begin to go down even more, right? Because if inflation begins to uptick because of these tariffs, then the Federal Reserve will be less likely or less motivated to continue to cut rates if they see that inflation is picking back up, as cutting rates can be viewed as inflationary. So agree to disagree. There's some good news, some bad news going into this week. But based off of how the markets are reacting, incredibly bullish, right? A big gap up, 0.59%. We've seen this all of last week, where markets will find any reason to push up. And anytime that there's any negative news, the markets refuse to pull on back. So again, strong uptrend, trading far above this EMA line. Even on the 1 hour time frame, there's no break of pattern of this thing we're tracing. It's just a little bit more on the overbought side, and we'll see if things continue to rally into the week. So Let's see. So Jerome will lower rates or he will resign. Well, that's what Trump continues to state over and over again, that he wants Jerome Powell to resign. But again, he has no influence over Jerome Powell. So Trump can say whatever it is that he wants. We all know that, he has a big mouth for a reason. But it will not influence what the Federal Reserve or what Jerome Powell does. So, we'll just see how things continue to develop. Jerome Powell has made it very clear that he will only decide to cut rates when economic data supports it. Some people agree with that, some people don't. At the end of the day, their opinions don't matter. It's, Jerome Powell and the Federal Reserve's job to decide, how to control our monetary policy. So Jerome 2026. Now, I think it's pretty clear that he will not be reelected. So Nvidia also pushing up to highs of 159, up another 1% during the overnight hours. And this seems to be a really big focus for a lot of people this week. And the reason why is because Nvidia, just like the market, keeps pushing up higher for longer, yet nothing has changed, right? So things look incredibly bullish for Nvidia, but incredibly overbought. So this is kind of just the conversation that I think is important to have with yourself, where you shouldn't be afraid to take advantage of opportunities if direction is in your favor. You should just be aware of, if we do begin to see a change of direction, do not be surprised and don't get caught off guard, right? So if you're not good at managing your risk, then obviously, buying or entering a position at these overbought levels might not be the best idea, right? Because it's not like you're getting a super lucrative deal. It's just the idea would be to enter and go with the flow of the trend. But as soon as the trend, if it does begin to kind of break its pattern, that you do your part in holding yourself accountable. So I wanted to ask you guys what stock you guys would like me to break down. And I wanted to keep it very short and sweet. Whatever stock you guys want me to break down, feel free to share it in the live chat. All you have to do is be subscribed to the channel. I'd be more than happy to break it down for you this week, or as of right now within this live stream. So Uber is one that's being pulled up by Sonia. What's going on? So let me go ahead and pull up Uber. Okay, so huge gap up from lows of $83 up to highs of 94. Let's look at this on the 4-hour time frame. Yeah, looks like we are coming back up to retest previous highs. I think the market's direction should be, and it looks incredibly bullish, right? Higher highs, higher lows. I think it's pretty safe to say it's like, Uber doesn't look like an incredibly cheap stock. It's not like it's a super good deal at $90 per share, right? Looking at previous highs, looking at previous lows and retracement potential, it's not that we're trying to buy at $90 because we think it's a super good deal, but direction is favorable, right? It looks like it's still trying to push up. And if you think that there's more upside, I can see in the short term why it is that you're paying attention to it. But I just hope that, again, you also take into consideration, the pullback and retracement potential that it has based off of previous patterns, and how if market conditions do begin to downturn, right? If NASDAQ begins to sell off, then of course that can bring down the rest of these individual tech companies with them. And then what is that, loss potential? So risk to reward ratios are something that we talk a lot about. If you were to buy now, right, using the little trend line tool, if you were to buy now and how much you could potentially make, what is that? If it makes new all-time highs, is that a 3% return? If it continues to push up to highs of, $98, that's a 6% return. But what if it sells off, right? What if it goes back to previous lows at $82? That's a 10.8% loss. If it retraces back down to previous lows, that's a 31% loss. So it's just the conversation to have with yourself is, what is your timeline and your intention with this position? Is it a quick day trade, right? So then that means that you just have to make sure that the trend is in your favor intraday, or is this a swing trade? And if so, then, where would you cut losses if direction begins to change? Understanding and respecting, the pullback potential. So just the conversation to have with yourself. So buying PLTR around 80s. I think it's going to be quite some time until we see PLTR at the $80 per share, right? PLTR did have a really nice retracement last week, so that could be something, right? I know some people really liked the sell-off that it had last week. It sold off into the lows of 130. And if you look at this on the 4-hour time frame, you can see this ascending uptrend pattern. Some people are very bullish on PLTR. And although I think that PLTR is incredibly overvalued, as an investment, I could also respect, if you're just a trader, right, maybe a swing trader, that if it pulled on back from highs of 146, if it pulled on back to lows of 130, and it's this ascending uptrend pattern, PLTR is incredibly bullish for a reason, right? It's a very strong company. It's a very strong stock. It's a much stronger stock than it is a company, in my opinion. So I could see why people would buy into the retracement to try to make money on the recovery. I could 100% see that could be a focus for some people this week. That, hey, I think markets are going to continue to push up and make new highs. And if that's the case, then I think that I want to buy PLTR at the lows of, low 130s and then sell into the 140, maybe 150 range. Why wouldn't that be a possibility if markets keep being so irrational that they end up making new highs? So I can see why PLTR would be a focus for this week for sure. All right, let's go ahead and move on to the next one. We got Hood. All right. So Hood definitely had a pretty significant past few weeks, especially due to crypto's performance. Now, again, this is 100% just my opinion, right? 100% just my opinion. If you think Hood is an incredibly undervalued company, then I say be my guest and buy as much as you think is fair, right? With what I see with Hood and how much it's rallied in just the recent months, I think it's incredibly overvalued and overhyped up. But I think that because of the current market conditions with crypto and with the NASDAQ market irrationally, pushing up higher, I think that it can give Hood the environment to sustain itself at these levels. I think that's very easy to acknowledge, is that yes, while markets overall stay irrational, I think Hood can stay just as irrational as well. But this is my only concern, and please just take it with a grain of salt. I'm not against anyone being invested in Robinhood, especially if you got in at these very low levels. I love to see that you're up. My only concern is for people that are being convinced to either buy crypto at or buy Bitcoin at $110,000 per coin, or to buy Hood as an investment at $83 per share. The reason why is that we all know that if markets begin to downturn, it's the most overhyped up stocks that will experience the largest correction. And that's just the thing that I want to avoid, is that I don't want a beginner jumping into the hype, seeing this recovery and being like, oh man, Hood went from lows of 37 to current highs. That's 120% return. I want to make 120%. I'm going to buy here at $82 and hope it continues to go up. Don't get me wrong. I think that Hood can go up to $85, maybe even $90. Why can't it, right? With how irrational markets are being. But at what cost, right? At what risk? Because if you do the math, right, from where we are right now, even if it does go to $90 per share, that's a good return. That's about a 9% return. But the retracement potential for beginners that don't know how to manage risk, right, and that are just buying into the hype, the retracement potential is huge. It's over 50%. So to make 5 or 10%, to potentially lose 50%, you could see why the risk to reward ratios are just way off, right? It's an incredibly strong company based off of recent patterns. But as soon as markets begin to downturn, in my opinion, then so will Hood, as we've seen it in the past before, right? It went from highs of, $67 all the way down to lows of 30, losing 55% of its value in 35 days. I think it's just an important conversation to have with yourself, right? So, all right. All right, let's see. What's going to be the next one? Alphabet is pretty cheap at the moment. I do agree with that. So that's more of a value. It's not much of I wouldn't say Google. So I wouldn't say Google is much of a stock that a lot of beginners would want to trade, right? Would you guys agree with that? That there's a big difference between a company or a stock that I want to invest versus I want to trade. Google is, when Google sold off, do you guys remember the news that came out that caused Google to aggressively sell off within a short period of time? Everyone thought this thing it went below like 150. Yeah, it went to lows of 136. No, it was during this one. It went to lows of 150. And one of the reasons that it was selling off, if I'm not mistaken, was its concerns with the competition with like AI and ChatGPT, but obviously it recovered. The big thing that everyone's talking about right now when it comes down to Google is its PE ratio. If you pull up Google when it comes down to its PE ratio, it's comparatively low in comparison to a lot of these other companies. Its PE ratio is 19.5 times its earnings. And it's an incredibly rich company. Some people question its ability to continue to grow. I think it's still like a juggernaut of a tech company, right? That's just my opinion. That's my 2 cents. So I can see why someone would want to invest into this long term. 100%. I'm invested long term in Google. But don't take, right? I'm not here to convince you. I'm not going to be like one of those crypto bros. I own Bitcoin and you need to own Bitcoin. And if you don't buy Bitcoin with me, you're an idiot, right? No, it's not. I really don't care if you choose to invest in Google, right? First off, I think that if markets do downturn, Google can as well. But I do believe that out of many of the other stocks out there, Google is probably one of the safer plays because of what its current PE ratio is. Fundamentally, Google is not running off of much hype. Fundamentally, it's just a very strong company with really good fundamentals, and it's trading at a fair price right now long term. So it's not the new shiny toy or the new shiny company in Wall Street. There's a lot of other new tech companies that are kind of taking the spotlight, I think is a safe way to put it for Google, right? AI is a really popular thing to talk about right now when you're investing in the stock market. And Google just, I would say, isn't being super obnoxious when it comes down to that. So, when you have Nvidia trading at new all-time highs, right? New all-time highs at 158, even after the tariff or the trade war sell-off, this huge recovery that it's had to make new all-time highs. But then you have Google still not recovering to previous all-time highs. You have people asking the question, why? Well, again, it's just there's a lot of investment right now being made when it comes down to companies like Nvidia due to their future projections, right? Or even not companies as big, but PLTR is another really good example. PLTR also sold off to lows of like $80 or $67 during the trade war, right? And then pushed up to new highs and hit highs of 148. So a lot of these very popular either AI tech companies are just taking the spotlight right now. And I think that's taken away a lot of the hype that used to be invested in Google. But I do agree with you. I think Google is a great long-term investment. I don't think Google is a great stock to trade. Two very different things. I think it's more challenging to make money off of trading with Google because other than its most recent week, right, when it went from lows of 162 to highs of 179, normally Google does not move very dramatically within a short period of time. So that's why I think it's a safer stock to invest in than it is to try to trade to make it or break it, right? So definitely a stock that I would pay attention to, especially if you're just trying to invest into the market. But when it comes down to trading, Google would not be on the top of my list. All right, let's do two more. So if you want me to break down your stock, just share it in the live chat. I'd be more than happy to break it down for you. Let's do HIMS. I'm glad that you brought that one up. HIMS, I think, is an important one to talk about because it's a stock that was very hyped up. And then based off of recent news, a partnership fell through and it caused the stock to go from $64 all the way down to lows of $40. And now, I don't know if you guys heard, there's a class action lawsuit against him because of how much money investors have lost. And I think this is what companies like HIMS will continue to run into. And it's because all they try to do is focus on their marketing to make the company seem more attractive than what it is. Because again, HIMS is not a tech company, right? It's considered a health company because of the supplements or drugs or whatever it is that you want to call it that they sell, right? But HIMS went from lows of $27 to highs of $65 within a very short period of time. And it's done that twice. It did that before the trade war, and then it went from 72 all the way down to lows of 25, losing over 50% of its value, and then it ran back up again. So again, a very hyped up stock. There's nothing wrong with trading these stocks, right, that are very volatile and very hyped up. But it's just important to understand the overbought and oversold levels. Right? So now a lot of people are paying attention to HIMS and asking that question, hey, do I want to buy into this dip after this negative news came out? Because if markets continue to be irrational and if markets continue to, push higher for longer, why can't HIMS recover as well? And that's definitely, again, a conversation to entertain. Why can't HIMS make a full recovery? Well, the partnership that it had in its past before that was supposed to help this company grow is no longer there. But again, in my opinion, fundamentally, HIMS is not a company that's running off of its fundamentals. It's just running off of its hype. There's a lot of greed in the market right now, and I think that's what's driving this stock price up. But I can 100% see as a trader why there could be some short-term, rallies because of its recent sell-off, right? It sold off to lows of 40. It's already recovered to 50. That within itself is nearly a 20% return, right? Now asking the question as we test the moving average, are we going to break above this and run back up to $60, $65? Or are we going to get rejected here and come back down to retest 40? I think this week we'll find out. I think this week will be a very interesting time to be paying attention to HIMS. The thing that I love about HIMS is that anytime that it runs up to $60 to $65 per share, I love shorting it. I don't recommend shorting for beginners. Please do not short HIMS stock, especially if you've never done it before, because it does come at a greater form of risk. But just knowing its history and how much it likes to sell off and get rejected at $67, again, it's just an overhyped up stock that loses its steam normally around $67. We still need to wait for confirmation every single time, but there's really nice retracement potential every time that it goes back up to retest. So let's go ahead and do one last stock. I like that, Grant. You actually took time to explain why you wanted me to break down this stock. Let's do it. So I love the upside potential in relationship to the downside risk. I'd love to hear your thoughts on it. Okay, so again, it's just going to be my 2 cents. So my only concern with this is the lack of progress that it's made on its recovery. So I do agree with you that, I can see the recovery potential that this stock might have had based off of its previous upswing, but you have to take into consideration, I think, and you almost have to experience the market a few times to understand what I mean. But do you see that how this thing was incredibly bullish back in late 2023 to 2024, right? It was unstoppable. Higher highs, higher lows, a lot of momentum, a lot of hype, and it just wouldn't stop, right? There was no break of pattern. And then all of a sudden it broke that pattern, and then it's never been able to recover since then. The hype ends up fading. And maybe now fundamentally it might be a better company. But remember, a lot of the things that drive these rallies, kind of like we're experiencing or we have experienced with companies like HIMS or PLTR, or I don't even want to say Nvidia. Nvidia is just a little bit of a different company. But all these very overhyped up companies that sometimes rally, not for fundamental reasons, but just because, again, they're incredibly liked currently in the market, they fade. And then there comes a time that new stocks and new companies come around, and then they're the forefront of, being overhyped up. And then the previous stocks like QCOM just begin to fade, right? They begin to consolidate. They don't make as consistent higher highs and higher lows. And that's my concern with this, is that we continue to lack progress above 175. Every time that it runs, it tries to run up to highs of 160, and then it gets rejected. So that would be my big concern here, is what we've seen for the past, honestly, year, right? It looks like for the past year, QCOM has just been trading sideways and or making, lower lows. And that, in my opinion, is kind of concerning because it's lacking signs of growth. Now, don't get me wrong. If you're someone that, was able to buy down here at the lows of 120, that was impeccable timing. You're able to ride this upswing. My concern is that when companies like this on the larger time frame begin to lack progress and clear direction, I think it becomes more challenging to have a lot of conviction in the company that you're investing in. Because fundamentally it might look good, but technically speaking, the technicals don't look strong for QCOM. A lot of consolidation, and it's not just in recent months, it's been for the past year. I can see dating since its sell-off. This was, pretty much almost July and August of last year of 2024. We've been trading sideways since then. So again, I'm not here to stray you away from QCOM. I hope to see QCOM break above 160 and hopefully run up to 170 and hopefully continues to push up here. But I think that it would be, obviously this is just a live stream that we host every Sunday, but I think it's important to have these conversations out loud because maybe the stuff that I'm saying now are things that you've noticed yourself about QCOM, but maybe you just didn't want to acknowledge it or fully see it because of how it goes against your current position, right? But again, I think that it would be a disservice if all I did was hyped up a company and not talk about its potential, areas of opportunity, right? Because yeah, it would be great to see QCOM run all the way back up to previous highs that it's had at 225. And this thing offers about 41% if that were to be the case. But based off of recent struggles and recent patterns, it's just been trading sideways, a lot of choppiness. And again, we talk about this with an LPP all the time. Is this stock something that's consistently bullish? Is it bearish? Or is it just consolidating? And I think it's fair to say that it's more on the consolidation phase or on the consolidation bearish side of things, because it is forming lower highs and lower lows as well. Something that you need to acknowledge, right? And I think it's better to acknowledge some of the bad than just completely ignore it and pretend like it doesn't exist, right? So that's all what I want to talk about today. I'll make sure that, again, if you're part of LPP, we can break down some of your stocks tomorrow during our live trading session. We'll be going live right at market open. And again, if you've never watched me trade live, we do have a discount code for you. It's the second link in the description down below. It's a one-time payment, lifetime access. You can watch me trade live. I think it breaks down to about $1.35 per day with the current sale we have going on. But again, you get to watch me trade live every single day, especially if you're a complete beginner. Every entry, every exit that I take during that session, you get to see it happen live. It's not for you to copy what it is that I'm doing, but for you to understand the thought process behind every trade I take. So if you want to learn more about that, second link in the description down below. And again, hope to see you for our live session tomorrow. Like always, let's make sure that we end the year on a green note.